Whether you live in the United States or Canada, we all know that gut punch feeling when you look at your paycheck and realize just how much of it is missing. But here's the real question. Who's got it worse, Americans or Canadians? Which tax system leaves you with more money in your pocket? And more importantly, how does each system impact your daily life? Stick around, because in today's video, we're diving deep into the differences between the US and Canadian tax systems. We'll explore everything from income taxes, healthcare costs, and sales taxes to retirement benefits. And by the end, you'll know who's truly winning the tax battle. Ready to get started? Let's go. We've all been there. You open your paycheck, you see the gross pay, and for a moment, you're smiling. But then your eyes drift to the net pay, and suddenly, your excitement crashes to the ground. What happened to all that money? Whether you're in the US or Canada, taxes take a bite out of your paycheck. But here's the kicker. The size of that bite varies greatly depending on which side of the border you're on. So, if you've ever wondered which country has the better tax system, how much healthcare really costs, or where you're getting the best bang for your buck, this video is for you. Let's break it down, one tax at a time. Income taxes. Who's paying more? Let's start with the big one, income taxes. No matter where you live, income taxes are unavoidable. But how much you pay and how it's calculated can be vastly different in the US and Canada. In the US, the tax system is progressive, which means the more money you make, the higher percentage of it gets taxed. There are 7 federal tax brackets ranging from 10% to 37%, depending on your income level. But here's where things get tricky. On top of federal taxes, many states have their own income tax. States like California or New York can add up to 13% more in taxes, while states like Florida and Texas don't have any state income tax at all. In other words, where you live in the US can dramatically affect your tax bill. Now, let's talk about Canada. Just like in the US, Canada also has a progressive income tax system. However, in Canada, your taxes are split between the federal government and the province you live in. At the federal level, tax rates range from 15% to 33%, depending on your income. But then, every province adds its own tax on top of that. For example, if you live in Ontario, you could pay an additional 5.05% to 13.16% in provincial taxes. If you live in Quebec, you could pay even more, as their provincial tax rates are some of the highest in the country. So, who pays more at the end of the day? Let's say you're making $100,000 a year. In the US, your total tax burden, including federal and state taxes, could range anywhere from 22% to 45%, depending on your state. In Canada, your total tax burden could range from 27% to 45%, depending on your province. While both countries have similar top-end rates, the US tends to offer more flexibility because of state-by-state differences. If you live in a no-tax state like Florida, you could end up paying significantly less than someone living in a high-tax state like California or New York. On the other hand, Canadians pay more consistent rates across the board, with higher provincial taxes for some areas, but it all depends on where you live. So, the tax winner here? It's not so clear-cut. Your location matters a lot. Payroll deductions, healthcare and Social Security. Now let's move on to those other deductions on your paycheck. The ones that aren't technically called taxes but still feel like they're draining your wallet. Payroll deductions for healthcare and Social Security. In the US, workers have payroll deductions for Social Security and Medicare. Social Security takes 6.2% of your paycheck, up to a limit of $147,000 in earnings. Medicare takes 1.45% of your income with no limit. Combined, that's 7.65% of your income going to these programs. And if you're self-employed? You're on the hook for the full 15.3%, since you're both the employee and the employer. In Canada, payroll deductions work a little differently. Workers contribute to the Canada Pension Plan, CPP, and Employment Insurance, A. The CPP takes 5.45% of your income, up to a maximum of CAD $64,900. A takes 1.58% of your income, up to a maximum of CAD $60,300. In total, that's about 7.03% of your paycheck going toward these social programs, slightly less than what Americans pay for Social Security and Medicare. But unlike the US, Canadian deductions don't continue past a certain income threshold, meaning high-income earners may actually see lower payroll deductions in Canada than they would in the US. Healthcare costs. Who really pays more? Let's talk about healthcare, something that can stir up a lot of emotions. Because whether you're in the US or Canada, we all know healthcare is a hot topic. In the US, healthcare is largely privatized. That means most people either get health insurance through their employer or buy it privately. On average, American households spend about $12,500 a year on healthcare, including insurance premiums, copays, and deductibles. And here's the kicker. If you don't have insurance, medical bills can skyrocket, often leading to bankruptcy for some families. Roughly 66% of all personal bankruptcies in the US are tied to medical debt. That's a huge number. In Canada, healthcare is publicly funded through taxes, and most healthcare services are free at the point of use. Canadians don't have to worry about going bankrupt from medical bills because the government covers most healthcare costs. However, Canadians do still pay for certain things like prescriptions, dental care, and vision care out of pocket or through private insurance. On average, Canadian households spend about CAD $2,000 a year on out-of-pocket healthcare expenses. Healthcare. Who wins? So, who's got the better deal? In the US, you have quicker access to specialists and cutting-edge treatments if you can afford it, but the system is expensive and often financially crippling for those without good insurance. In Canada, healthcare is accessible to everyone and largely free, but there are longer wait times for non-emergency treatments, and some services aren't covered by the public system. So, in this case, Canada's universal healthcare system offers more financial protection, but that doesn't mean the system is without its drawbacks. The emotional weight of healthcare costs in the US, though? That's heavy. Sales taxes, the hidden tax you're always paying. Next up, let's talk about a tax that's a little sneakier: sales tax. Every time you buy something, whether it's a new pair of shoes, a burger, or even a cup of coffee, you're paying a little extra in taxes. In the US, sales tax varies by state and can range from 0% to over 10%. Some states, like Delaware, don't charge any sales tax at all. Others, like California, have some of the highest rates in the country, reaching 10.5% in certain cities. And here's the fun part: you don't see the sales tax on the price tag. It's added at the checkout, so your $10 purchase might suddenly become $11 once the sales tax kicks in. In Canada, there's a federal goods and services tax, GST, of 5%, plus a provincial sales tax, PST, that varies depending on the province. In some provinces, like Alberta, there's no additional PST, but in places like Quebec or British Columbia, you could pay up to 15% in combined GST and PST. And unlike the US, in Canada, the sales tax is often included in the price tag. So, what you see is what you get. No surprises at the checkout. Sales taxes. Who pays more? So, who's paying more? In the US, you might feel like you're getting a better deal when you see the price tag, but don't forget about that sneaky sales tax. In Canada, you're paying a bit more upfront, but at least there are no surprises when you reach the register. So, it's really a toss-up. It all depends on whether you prefer to know the full price right away or deal with the shock later. Retirement benefits. Who takes care of you after you stop working? Now let's talk about retirement, the time when you've finally stopped working and want to enjoy life. But here's the thing: how much you get to enjoy depends a lot on how your retirement benefits are funded. In the US, retirement is largely funded by Social Security, which you pay into during your working years through payroll taxes. When you retire, you receive monthly benefits based on how much you contributed over your lifetime. On average, Social Security pays out about $1,500 per month. However, the maximum benefit for those who've earned the most is around $3,000 per month. In Canada, you've got the Canada Pension Plan, CPP, and Old Age Security, OAS. The CPP pays out based on your lifetime contributions, similar to Social Security, with an average payout of about CAD $619 per month, and a maximum of CAD $1,203 per month. But here's where Canada has an edge. There's also the Old Age Security (OAS) program, which provides additional payments to all seniors, regardless of their work history. The OAS benefit can add an extra CAD $615 per month to your retirement income. Retirement. Who's better off? So, who's got the better deal when it comes to retirement? In the US, Social Security can provide a decent monthly income, but if you want to retire comfortably, you'll need to rely heavily on personal savings or a 401k. In Canada, the combination of CPP and OAS gives retirees a little more security, but just like in the US, if you want to live comfortably, you'll need your own savings as well. So, maybe move to Canada for retirement, The final verdict. Who wins the tax showdown? So, at the end of the day, who's got it better when it comes to taxes, Americans or Canadians? Well, it's not so black and white. The US offers more flexibility with lower taxes in certain states, but healthcare costs are sky high. Canada offers universal healthcare and more predictable taxes, but you might end up paying more overall depending on where you live. It all comes down to what you value most, lower upfront taxes or more comprehensive public services. Either way, understanding your tax system can help you make better financial decisions and maybe, just maybe, leave a little more money in your pocket. So, what do you think? Would you rather pay taxes in the US or Canada? Let me know in the comments below, and don't forget to like this video, subscribe, and hit that notification bell for more in-depth financial breakdowns.